First of all, I would like to thank all of you, for joining this webinar. We will be doing a small introduction on Spectre Exchange and the new IO section. But for the moment, please take a moment to go over this disclaimer, and I'll get back to you within 30 seconds. Okay, so after this disclaimer, so in our recent update on Spectre Exchange, we introduced the IEO section, which is short for Initial Exchange Offering. And in this section, our users are able to find tokens and the listings that we offer to them exclusively at first. And so with this IO release, we have one project already inside Spectre Exchange. And this webinar is an opportunity for all of you to be able to ask questions to the management team and to hear their story and what they have to present to you. Now, at the top left, as you can see here, you can find the IO section. And if you click on it, even if you're not logged in, you can click on it. It will take you to this menu where you will be able to see at the top left, first of all the tokens that will be listed, starting with Chaos. Then by clicking on each of them, you'll be able to see different options at the left, which may vary depending on the token you have selected. And here you can see on the main page some important information about the project itself. So you can see some information about the how many tokens are being offered at what price. You can find key facts, information about key facts, project strengths, project risks. You can find also different links to the white paper, their website, terms and conditions, disclosure, everything, basically all information you need to know. You can find the links here. And of course, you can contact support, and this will take you to their website where you can ask any questions that you may have. So it's very important for you to know that you need to be to have submitted your KYC application, and it needs to be approved before you can participate in any IO, or you can participate in any place any order in the order book. For IOs that are not yet live, you will see the join the waitlist link here, which will take you to a different screen where you will be able to input your data, some information about how many tokens you would like to receive, and some other information that the Chaos team wants to know as well. So that's first thing. And also at the next, on this side of the slide, you can see the basic KYC information that will be requested from you. Now, the next part, together with this IO exchange, with this IO offering, we have launched also the affiliate portal for our users that want to become affiliates of the platform and actually take advantage of not only these IOs that we offer, but also on any trades that happen in the secondary market. This exchange portal is something that has a similar look and feel with the normal Spectre affiliate portal, and it's something that you can easily find on the website as well. So having said this, I would like to pass the torch to the Chaos team and to Bill and Hitesh that will be explaining all things related to Chaos.
So guys, we're going to get started. We'll walk through the project and we'll walk through some the core specifics of it, and then we will open up for specific questions. Beyond that, we welcome any questions, especially the more detailed and more in-depth questions, because this is a fundamentally very, very strong project. And the more we can get into the depth of it, the better it is for everyone. Before we go further, I'm going to pause here for just a few seconds. This is simply a legal and notice and a disclaimer that kind of clarifies that we will be discussing many different aspects here of financial markets, forward-looking projections, and these are all meant to be for educational and informational purposes. These are not guarantees. These are not by any means projections that can be backed up in independence of all the other factors that play into it. So please take a look through this, read through it, make sure that all of this makes sense. And then let's go ahead on to the core thesis behind the Chaos project. As many of you are familiar, chaos instruments are quite common in the finance sector. The chaos hedges are typically put together by large funds, by individual investors. And the concept is to invest in or to hold certain type of assets that protect you in times of inflation, in times of significant market distress, in times of global chaos. So the concept is to focus on things that are focused on the necessities of human existence, such as food, water, energy, shelter, and so on. So that's really what the Chaos Project also focuses on. However, what Chaos does is goes one step further. And instead of focusing on holding assets in trying to create a hedge against these kind of distressful events, it instead tries to focus on a revenue generating mechanism within the type of assets that you would typically hold for a chaos hedge. So those type of assets include oil and gas production contracts, oil and gas production sites, like the actual land and the actual wells that you're doing the production from, ownership over the equipment that is being used to produce those kind of things. Also, active participation in real estate and commercial assets, specifically in commercial assets such as agricultural land or mills that are used for processing, refineries, and so on. So those are the kind of things that the Chaos team goes out there, locates, and focuses on harnessing as many of those assets into the project as possible. The idea here really is that you should not have your capital or your funds locked up in a staking contract of some kind, and that there should be a clearly defined source of this revenue, which then in turn becomes your return from holding the Chaos token. And of course, try to leave the token itself to be a liquid asset so you can exit or accumulate as you would like to at your own leisure. So let's go ahead and walk through how some of this has taken shape. We started doing some of this towards mid-2016 when we first started focusing on what we call the HARP, or the HARP program. That's the Hard Asset Reconstruction Program. And the concept behind that was that we would go into emerging markets, specifically India being a major portion of that we would go into these emerging markets, we would identify distressed assets or liquidation assets, we would acquire those and then turn around and sell them at below market value and yet generate a significant profit while doing so. The idea here was really to treat these hard assets as really short-term trades. And if you could do that successfully, you no longer have the book risk because you're not holding these assets for a long time. So I'll give you a very simple example of that. Imagine that there is a factory that has a market value of $30 million that is being liquidated. We can have, we as Chaos in that case would basically go in and we would be able to acquire that particular factory for something like $22 million because that is the debt on that particular property. It is currently going through bankruptcy, it's going through liquidation, and we're able to walk in and assume the title over that for $22 million. Now, while we are still doing this process, while we are still in the closing process, which can take a few weeks to a few months, we identify the actual true buyer who is going to purchase this asset from us. And let's say that they're going to purchase it from us at $27 million, because frankly, that's a great deal for them. They're acquiring a $30 million factory for $27 million. And if we time everything well, then within a space of a few months, we can actually walk into the transaction and exit from the transaction while taking a significant profit along the way. That is an example of hard asset arbitrage, or the HARP program. That's what we really started focusing on back in 2016. In 2017 and 18, we started really exploring much more of the energy sector and working with that. That really came to a head right after the COVID pandemic in 2020, when you had the big collapse in oil prices temporarily. It was literally for a couple of days. And at that time, you had many oil production sites going bankrupt and becoming available for people to come in and acquire them. And that's when we started working with additional companies in the US to acquire those type of assets and also to focus on developing them using unique equipment. So the result of that, the culmination of all of these developments since 2016 to now, is that we have been able to develop a real hard asset-based revenue mechanism that provides very significant token holder protections compared to every other type of DeFi system out there. Most DeFi protocols are reliant on the constant increase in value of the crypto market itself. That is not the case with us. Our revenue source is coming directly from the real world, which we are then tokenizing and distributing to our token holders. So it's a very different mechanism. We are actually making sure there is something that is over collateralizing the return that is actually being generated. And the return is not being generated by an algorithm or by a protocol where we have determined what sounds attractive. It is simply reflecting what the returns are and what's going on in the market and the world at large. So for example, right now, the returns are doing quite well because the price of oil and gas are quite high. If the prices of oil and gas go down, then we would see a reduction in that return. So what you see is what you get. This is very, very transparent. So that's a very good sign for a project in terms of token holder protections, because it's transparent, because it's backed by something very real, and you can independently verify that without the crypto markets. You can look at the WTI price of oil, you can look at the Henry Hub pricing of natural gas, and so on and so forth, without having to wonder whether or not the report you're receiving is accurate. The second thing, like I just mentioned, is the very well-defined source of cash flows. Because fundamentally, there is a cash flow positive business behind the scenes in each of these cases. The oil producer that is producing the oil is doing so at profit. They're not going to produce oil if it's costing them more to produce it. So they're just not going to do that. So there is a well-defined source of cash flow and revenue behind the scenes that is underlying the entire exercise. And then finally, the very nature of the kind of revenue that we are dealing with here, which is the production of oil and gas and so on, it provides a very reliable hedge against inflation, against government actions. In fact, we are seeing that play out right now. So this was our thesis back in 2020, that after the pandemic, we would see a massive boost in the price of oil and gas. That came to pass. After the elections of Joe Biden, we had our, I guess we had the thesis that because of the declared policies of the government, we would see massive shortages in food, in energy, and we would see an increase in prices of those categories, and we would see massive increase in the prices of real estate. That is exactly what has come to pass. That is exactly how it has played out. And currently, these industries have performed somewhere between the 16 to 27% range of APY. Okay, now that is not to say that that's the same range that we will see moving forward. We might see more, we might see less, but that's currently what it has performed at. There are a few distinct, different ways that we are actually producing these returns. So I do want to break that down quickly. This is not simply a case of let's go out and buy a bunch of oil or let's go buy some futures contracts. That's not what's actually happening here. One of the very important aspects to this is that we're actually receiving fixed allocations of crude oil, natural gas, and similar other energy contracts under what are called volumetric production agreements. And hopefully this will answer a lot of the questions that might be coming up soon, which is the question of how does this functionally actually work? What is actually going on between Chaos and the production of oil and gas? So what actually happens is that Chaos goes to an oil and gas operator and says, we would like to give you $100,000, but in turn, we would like to receive from you 50 barrels of oil every single month for the next 5 years. That's an example of a contract that we can get into if we are their only option, right? So we're basically giving them the capital, but Chaos also brings a few other things to the table. Chaos also brings, in some cases, unique approved equipment that they might not have access to without us. And that's why we're able to get into some of these agreements where traditionally people would not be able to just get them straight up because they're not necessarily very financially rewarding for the operator, right? For the operator to pay 50 to 100 barrels of oil per month in production for the next 5 to 10 years is a very expensive contract. That's very expensive form of financing for them. But if it also comes with access to certain kind of equipment that they could not have access to otherwise, that kind of pushes the needle, kind of changes the game for them, and that's when it makes sense. So these are the kind of volumetric production agreements that Chaos goes out there and tries to get into. In some cases, we are able to participate in them because we specifically target the kind of assets that are going through some legal troubles. They might be going through bankruptcy, they might be going through liquidation, there might be a business that is falling apart. There are many different things that play into it, into the selection of the criteria of how we go and find these assets and how we pick them out. And that's one of the key aspects behind this particular project and what makes it work and why it is so difficult to replicate this easily. So these kind of volumetric productions effectively make kind of a backbone of ongoing cash flows. Every month, we know that this is the amount of oil or gas that we are going to receive, and that when it is sold into the markets, this is the amount of revenue we're going to receive. And that's very easy to predict because we can look at the WTI price of oil, we can look at the natural gas pricing, and you can estimate those values very, very accurately and very precisely. Now, in addition to that, you have transactions occurring in the real estate side with the HARP program that I'd given as an example earlier. Those do not work on a consistent cash flow basis. Instead, you see kind of kicks of revenue, right? You see sudden inflows of revenue every few weeks or every few months as those different transactions complete. From the beginning of the transaction to the exit from that transaction, it might take a few months, but you're seeing this consistent kick of cash flow coming in every few weeks or every few months when those transactions occur. But during the time that that transaction is still underway, remember that the title of the real estate asset is being held behind the scenes. So there is still a hedge in place. There is still something on the balance sheets that's actually keeping this fairly well structured. So you're not seeing this risk of let's go out and throw this money out there and hope that we generate a return. It is a very, very conservative approach. It is a very structured approach that makes sure that we do not see big deficits. So that's the explanation of exactly what is going on behind the scenes, why this functions so well, and why it is inflation resistant, because we have paid today for oil production for the next 5 years. So no matter what happens in the market for the next 5 years, what we are going to receive will be 50 barrels of oil or 100 barrels of oil, not a fixed dollar value. So if the price of oil goes up, it benefits us tremendously. If the price of oil goes down, then obviously we see lower net dollar value return from it. But that's fine because we paid for it and we are now set up for the next 5 years or whatever the time period is. So here are some of the assets that are currently involved in this production. We have natural gas production. It includes a 187-mile natural gas pipeline in Central Texas that has already been pledged to the Chaos project. So as the capital comes in from the sale of tokens, we can go and activate more and more of these different assets that have already been pledged to us. We have partnered with 3 different operators. We have access to about 2,000 active oil wells that approximately produce about 300,000 barrels of oil annually, which is around $30 million per year in production at a $100 price of oil. Obviously, price of oil is higher than that at the moment, but that's roughly what the production is. We also have, at this moment, we're running the largest recycle and rescue project, which salvages abandoned oil wells. For those of you who have worked with us on the Solar Oil project, you're familiar with this. The agreements and the assets that we have access to in this particular division have the capability to scale to over 1 million barrels of oil annually in production. So it's a very, very significant portion of the project. We have mining operations where we can partner with third parties who can come in and basically deploy on our natural gas and oil well locations, and they can mine Bitcoin there, and then we basically receive a portion of their production in the form of a royalty agreement. So there's obviously, some nice margins there as well. And then finally, we have some government agreements on these different categories. We're working currently with the state of Oklahoma. Actually, as of yesterday, the University of Tulsa is now funding a study specifically on zero emission natural gas production using our pumping technology. So we are working with them on that. We are looking at working with the state of Texas. We have some bids in with the government of Ecuador. So there's quite a bit that we can do with government subsidized actions as well. And then finally, we have the liquidation real estate. This by itself is the single largest category, or has the capability to be the single largest category. This currently represents access to about $75 million to $300 million worth of transactions that are occurring per month. that we have the potential to go in and participate in, that we can pick and choose from that and see what actually fits our criteria. Obviously, we prefer to use the kind of transactions where we have the pre-selling already in place, meaning we can enter and we can exit fairly quickly without having to hold on to the asset in our hands. The faster we can do that, the better it is, because that means we're not bearing the risk and we're not keeping the money in the market. And we can go into the details of this if you have any other questions, but hopefully this gives you guys a good overview of exactly how this works. The project is being run, Chaos as a project is being issued by DART, which is the Decentralized Autonomous Resource Tracker. The whole idea here is to actually be able to track the production and the value of different resources. And that has kind of taken shape over the last year or so to become the Chaos project. And that's who is behind all of this. And you're going to see the team here in a few minutes. You can already see down here, it's DART DAO Systems or DART DAO Systems, depending on how you pronounce it, which is a company set up out of Nevis, which is the issuer of the Chaos token. So let's talk about the tokenomics very briefly. The Chaos token will be released in 3 different phases. In phase 1, which is the phase we are currently talking about, there'll be 50 million tokens released at 20 cents each. In the second phase, there will be 100 million tokens released at 40 cents each. And in the third phase, we will have 200 million tokens at 90 cents each. The point of having a staggered release like this is, first of all, to make sure that the early adopters and the early investors into the project have a very clear mechanism by which you have some benefit as you're going from phase to phase. The second is because the kind of projects that we currently have on hand, the kind of assets we have on hand right now, we can start turning them on with fairly small amount of capital because we've already been doing this for a few years. As we complete those projects, we're going to start focusing on assets that cost more, that have much higher bandwidth overall. So as we move from phase to phase, the scale of the kind of assets that we work on and that we start activating, that also shifts and hopefully gives a good incentive for everybody that is involved. Once we are actually out in the market, our goal would be to have on the secondary markets the token value of something between $150 to $3. And I'll actually walk through exactly how that valuation is achieved. So we are taking a very simple and a fairly conservative approach to this. If you look at how the stock market values stocks based on dividends or based on the underlying returns being generated by an instrument, you find that the multiple is somewhere around 22x. Okay, what that means is if something is going to pay out a dividend of around $1 per year, it's going to have a market value of around $22. Okay, that's roughly the case. If you look in the crypto market, the valuations are through the roof. I don't think I need to tell all of you that. All of the people on this call are fairly well familiar with the crypto markets, and you're aware of how much out of line some of those valuations tend to be. So we are being very conservative. We are not going to assume that we're going to have an insane valuation based on our yield. We are instead going to assume a 20x valuation on the yield that we put out. So for example, if we have the token producing a yield of 0.045, okay, which is basically 4.5 cents per annum, then we would expect our market price to be close to 90 cents. If you look at some of these different projects out there, you'll see the valuations are way, way higher than that. But on our side, let's try to be mindful of that. Let's try to be realistic about what just a pure production-based valuation would look like. So as we move from phase to phase, you see that at the phase 3 launch price of 90 cents, at that point, we are saying that our token's fundamental value is around 90 cents. That's what we're going to sell it for when we issue it. We have a yield of 13.5 cents per token. That gives us a market price of around $2.60 or at a 20x multiple. Now, remember, this is not saying that the yield will be 13.5 cents. The yield might be 10 cents. The yield might be 20 cents, right? The point is that whatever the yield is, you can assume that a 20x valuation is fairly well supported in the market. And if it's not, if you're actually putting out pretty high yields and we're not seeing a very high market price for whatever reason, that's just an incentive for us to go out on the Chaos side to go and purchase significant number of these tokens ourselves, basically a buyback program, because obviously that makes sense. The same way that if you have a public company and the shares are undervalued, then you might see a movement to make the company go back to private, because the private holders can just go out and acquire most of the most of the shares. So hopefully that makes sense. Hopefully you guys can understand where the valuation is coming from. The concept here really is to be a free floating secondary market token that anybody can participate in after the first 3 phases are done. Beyond the first 3 phases, DART itself will not be issuing any more of chaos tokens. All of the other chaos token acquisitions that people make will simply be on the secondary market from other holders. This is a write-up that just kind of explains what I went through, where if the value of the token is not reflecting the yield that it is putting out, if the value is lower, then basically DART can go out and buy back many of those tokens, which in turn causes the price of the token to rise up over time. Okay, very briefly, let's talk about how the actual rewards get distributed. So the rewards actually are displayed daily, they accrue daily, and they are then airdropped, if you will, into your wallets on a participating exchange, in case on the Spectre exchange. They're basically added to your accounts on there on a monthly basis. So you can see what is being accrued every single day. And then once a month, the distribution actually occurs and you can claim the rewards that you've accrued so far. Now you choose to accrue those rewards either in USDC, which is the only truly audited stablecoin that we're aware of at the moment, or you can choose to acquire more rewards in Chaos itself. So whatever the current issuing price of Chaos is between phases 1 through 5, 1 through 3, whatever the issuing price is at the time, that is the amount of Chaos that you would receive instead of the USDC. So that's up to you. And you can choose a hybrid as well. You could say, for example, I want 40% of my rewards in USDC and I want 60% of my rewards in more Chaos tokens. And that effectively allows you to compound your Chaos holdings over time, and you can start accumulating higher and higher rewards as time goes on. A very common question we get is how many Chaos tokens are being issued and how many will be issued in the future. So the Chaos tokens have a hard supply of 750 million. Okay, there will not be any more Chaos minted beyond that. It's as per the smart contract, that's the hard limit. However, if at some point we expand far beyond the current current number of assets, and we have many more assets coming in, then there might be a Chaos 2 at that point, but it'll never be in the current Chaos project itself. This Chaos project is fundamentally designed only for 750 million tokens, and that's all this is going to work with. We don't really anticipate that we would need to even think about anything more than that until at least 2027. Finally, in terms of restrictions on who is allowed to purchase the Chaos token, so if you are a US-based resident, then you can only purchase this if you are an accredited investor. If you're a retail investor, meaning you are not accredited as per the SEC definition, then you may not participate in purchasing the Chaos token. Obviously, if you are purchasing on the Spectre exchange, you cannot purchase if you're a US citizen at all, regardless of whether you are retail or not. Residents of Nevis may not purchase the Chaos token, and then any location that is on a restricted nations list or on state sponsor of terrorism and so on, that is just not in compliance with the international KYC AML rules, they cannot participate in that. Very briefly, we're going to go over how the DART team is set up and how the whole thing functions. So you have the DART team itself, which at its core is run by Bill, Dimitris, who are both on the call with us, Akis and Yusuf. This is the core DART team that is basically running all of these key aspects of the project itself. And then finally, and you have the operational team, which does a lot of the on-the-ground work. This includes the team members in India who are identifying the real estate transactions, includes the team members who are in the US that are identifying energy assets and so on. And then finally, you have a completely different team, which is project-specific advisors. These are people who are not part of Chaos itself, but they are essentially brought on to manage the projects individually. So for example, when it comes to stripper well oil production, you have Douglas Gaines that helps manage that. When it comes to equipment and hardware management, you have Gary Samis. For natural gas pipeline related functions, you have Amzi, who is ex-CFO of Chevron, specifically Chevron pipelines. So there's different people that have been kind of tapped to come in and help manage these very unique specific areas that they have key experience in. And that's how the project as a whole comes to be. Again, these are not official parts of the Chaos team or the DART team. The DART team is comprised of the core team up here and the operational and support team down here. But these are kind of critical people who help this whole thing function. I'm one of the people that is involved in this because obviously we've run the Solar Oil project for a while. That is now going to be contributing its production into the Chaos token as well. So hopefully this gives you all a very in-depth understanding and overview, and also answers many of the questions that you might have had. And we're going to go ahead and open up for any other further questions you might have. We have seen the question is, what growth have you seen in the hard asset arbitrage business since 2016? So this is actually a great question, and I would recommend that you also look up online. So if you go online and just look up foreign direct investment in India, it'll actually show you third-party verified data instead of just my claims of exactly how much that particular area of business has grown. A big reason for that was major regulatory changes that occurred between 2016 and 2018 in India to actually create new bankruptcy laws that allows these kind of liquidations to occur. This particular area of business has absolutely exploded since then. It has seen almost a 4x growth in that time period. So it's a very, very significant part of business at this point. It is expected to remain a very significant part over the next 7 to 10 years. Who owns Dart DAO Systems? This is the team right here that we just showed you. This is the team that owns Dart DAO Systems. What is the profit split? So there is not a profit split per se. What happens actually is that you have Chaos tokens that are held by the Dart team. That's actually broken up here in the tokenomics. And some of the different operators of oil and gas, for example, they're also given some Chaos tokens. So that's their incentive to actually continue their work and do what they're doing, because they are going to be benefiting from the tokens that they are holding. So it's not like there's a breakup between the revenue being generated and how much of that goes to the Dart team and how much that goes to the operators. It's actually just functionally, they own a bunch of Chaos tokens. So automatically, some of the production goes to them. Okay, how long are the 3 phases set up to go on for? So the 3 phases are going to be set up for each phase runs for 90 days, or when its allocated supply is exhausted, whichever comes sooner. So for example, in phase 1, we have 50 million tokens, which is basically $10 million. The moment this is exhausted, we will close out phase 1. Okay, so that might be within a couple of days, that might be in 30 days. We don't know for sure. We do have enough commitments in writing at this point that we believe it will exhaust very quickly. But functionally, it can go for 90 days in case we don't actually close out all the investors that have mentioned that they want to be a part of it. So each phase is designed to run for 90 days or whenever it is exhausted, whichever is sooner. So in the worst case scenario, we're basically saying over 9 months, we would go from phase 1 to the end of phase 3, and then we would go to open market at that time. And the open market pricing will just reflect what we were able to accomplish in the first 3 phases. Yes, all the Chaos tokens that are issued in the different valuations are functionally same Chaos tokens. There is no difference between them except for the issuing price that they're being released at. Now, of course, that is a very significant difference because the issuing price of the token itself changes how much capital is then able to be put towards oil production, natural gas production, or real estate transactions, and so on. So it is it's a very significant change when there is a change in the valuation of the token itself. But from a technical perspective, there is no true difference between the token itself. They're all technically the exact same, it's the same code. The next is, where does the money for buybacks come from? The money for buyback comes from the Chaos tokens that are held by Dart and by the different operators themselves. So you see this breakdown right here. If you look at this, you see 50 million tokens are held by the Dart team, 200 million are held in the liquidity pool for the platform itself, and then you have 50 million tokens that are allocated to business and rewards. Now, there is a significant amount of revenue being generated by these tokens as well, which is actually being kept by the Dart team or by the operators and managers of the different assets. So you have 150 million tokens that are directly held by them. So that's a very significant portion of the return being generated. That's where that money comes from. That's essentially the Dart team's money, if you will. Okay, can you sell your tokens before phase 3 ends? Yes, absolutely. You have complete freedom to sell your tokens to any individual private buyer. There is no issue with that at all. And the price is the price that you agree to between each other. I fully expect that there will be some users who between phase 1 and 2, if there is sufficient demand in the market, right? There is that risk. There has to be sufficient demand in the market. But there will be people at the launch of phase 2 who will be very happy to pay 35 cents for the token per token, because the only way they can buy it from us would be at 40 cents. So there's a significant number of people who would be willing to purchase a token at a lower price. So somebody who acquired them at 20 cents would probably very willing to sell them at 35. And maybe some of you will say, forget that, I'm going to hold on to these because these will be worth even more. And frankly, the cash flow is good enough that I don't want to sell them. As an SOX holder, am I able to get my SOX swap to Chaos? Yes, absolutely. You will be able to swap your SOX for Chaos because fundamentally, the businesses on both sides are effectively the same. Chaos is more diversified. Chaos is more liquid. So it's better in those regards. But functionally, yes, you'll basically have a value assigned to your SOX, depending on how many you have and how long of a staking period you have left. And we will basically assign equivalent Chaos tokens to you and effectively close out your SolarOil account. Will phases 2 and 3 also be on Spectre Exchange exclusively? That is the current plan, but it is difficult to predict and promise what might happen over the next 6 months. What do I need to do to swap my SOX? Don't worry about that at all right now. You're going to receive very detailed instructions on that from the SolarOil platform. Okay, how much time before the tokens start generating rewards? Excellent question. I'm glad that you brought this up because I should have actually covered this in the explanation itself. You do not have to wait until the end of a phase or the end of all 3 phases to start receiving your rewards. You actually start receiving your rewards literally the second day of the tokens being assigned to you. The reason for that is that these tokens are reflecting production that is already out there, right? It's just being assigned to the token holders now. What you will see, that, however, is that they'll be fairly low in the beginning and they'll start increasing over time. And that's because there is some time lapse between when the capital is received by the DART team and then that capital gets deployed out into the field, into oil wells and so on, or into a real estate arbitrage transaction. There is a time lapse there, and that time, varies quite a bit. It can be as little as 15 to 20 days. It can be as much as 2 to 3 months in some cases. But you will see this uptick in rewards over time as more of that capital starts being used efficiently. But you will start receiving rewards very, very quickly, pretty much the next day onwards. They just won't be very significant in the beginning, and they'll build up to be more significant over time. Okay, what if I don't want exposure to all the different assets? I only want exposure to one thing, for example, oil in this case. So SolarOil will not be functioning in its same format now. There are some different ways to deal with that. We are going to give a whole list of different solutions out there, so you can decide then which one makes the most sense for you in that particular case, where you can actually retain exposure just to oil and not to other things. But we are very aggressively going to move towards something like Chaos over time, simply because to be entirely focused on one single asset, which over time will not be able to retain the market dominance that we are currently seeing. Okay, keep in mind that a lot of the currently elevated pricing is because of supply chain issues, which are not normal in a healthy economy. You're also seeing significant policy issues, which are resulting in this pricing, which is not functionally accurate. So there are certain reasons why we believe it is better to lower exposure to one single asset class. It is much more important for us to actually diversify across multiple different types. However, like I said, if you want to select your exposure type like that, we will give you a range of possible options with SolarOil side. There will not be the option to compound your SOX holdings in the future because the oil production that we are going to produce there will be allocated towards Chaos instead. So you won't be able to compound and earn new SOX over time. Is the yield based on the expected market price or the initial token valuation? It's driven more by the initial token valuation. So it's a very simple concept. If you really take a step back, what this is a tokenized hedge fund in a way. That's really functionally what's happening. The money that goes into these investments is what drives the actual returns. it's not the price of the token or the secondary market price of the token. Like we just looked at here, you have many different coins on the market today where there is no real reason for what their pricing is, because their valuation does not make any sense, even when you account for the yield. That's why we don't believe that the token price or the market price of the token is a good judge of what the yield should be. The yield will be driven primarily by the value of the oil and gas assets, which make up majority of the investments. And secondly, it is driven by the amount of investment that actually goes into it. So that's where the value of the coin plays a role, because in different phases, because the value of the coin is different, the amount of investment going in is a little different. If you get chaos tokens as rewards, are they priced at the token price of each phase or market price? At the token price of each phase until we are out of the phase 3. Once we're out of all 3 phases, then it will be priced at the market price. Is there any advantage to compounding against buying at market price in phase 3? I think the biggest reason will be that you might be able to compound and receive rewards from the liquidity pool, but you might not be able to receive, you might not be able to purchase enough of these out in the open markets. If we are doing a good job and the project is working well, then most people should naturally want to hold their tokens, which will cause the price of the token to climb up over time. And there might not be a lot of coins out there for you to actually purchase. So if you want to acquire more chaos, compounding might be the better mechanism at that time. Will the Dart.Cash platform support the chaos token? And if so, will USDC rewards be available to transfer to the platform's yield wallet? Yes. The answer to both of those is yes. Dart.Cash is Dart's official platform, and chaos is Dart's official offering. So yes, you will be able to access that, and you'll be able to convert that to USDC and hold that in your yield wallets and so on. What happens if phase 2 doesn't get filled? Then, like I said, if 90 days pass by and the phase 2 is not completely filled, then there's basically a break of about 30 days in between the phases. And then the next phase opens up at the 90-cent price point. On Spectre Exchange, what network will be supported for USDC withdrawals? I see that AVAX C-Chain network is an authorized whitelisted network. Kay, that's a question for you.
Sorry, if I may take this one, Kay?
Sure, please go ahead.
For USDC withdrawals, it will be ERC20. It will be the Ethereum. So that's for now. For AVAX C-Chain, for now, it will only be for the chaos tokens, and if we have any other tokens listed in the IOs, at least for now.
Okay, I think that was the last question.
No, there are a few questions. Will phase 2 start even if the yield in phase 1 hasn't reached the 4.5 cents?
Yes, and the 4.5 cents is not a yield that we can necessarily guarantee that we will hit that. That is our current estimate. That's our current target based on how things have been performing right now. That's what we expect it to be. But keep in mind, this is all real world, right? This is not like, I'm not somebody with the powers of somebody like Do Kwon, where I can just say it's going to be 20% and that's what it'll be. It really depends on the market.
And is there a minimum yield before phase 2 and 3?
No, there's not a minimum yield. There is a maximum token sale amount. If there's a maximum amount of tokens that we can sell in that particular phase, for our case to work, for our actual capital investment to actually work on our side. Once we reach that maximum, we're not going to sell more tokens at that price.
Got it. See a question. I'm on the waiting list. When can I start purchasing? So when does the IO go live, Hitesh? When is the launch date?
So on the Dart side, if there's anybody who is US based, especially on the Dart side, you can actually go there as of right now. You can sign the agreements and you can go through the entire process and make your token purchase. If you are on the SPX side, Zio and Kay, you need to give them direction on that, on how soon that will be, that they can do that. The rewards themselves, the rewards actually begin on the 15th of June. That will be the first day that we will actually send out the rewards.
Okay. Yeah, I mean, I received a few questions regarding allocations. Mm-hmm. Hitesh, what color can you give on what percentage of the phase 1 is already filled? SPX, mind you, had an allocation of around 1.5 million or so. And based on the current commitments already, that's been exceeded. just FYI, for those who have asked that question. And so, yeah, Hitesh, maybe you can give a bit more color. What still remains in phase one in theory?
So we have in writing currently commitments that technically exceed 10 million. Like always is the case, we expect that maybe only 60% of those commitments are actually going to come through. Right now, our expectation is that somewhere between 6 to 8 million is what is spoken for between the allocation we're given to SPX, the allocation that's on DART itself, and then some of the private investors. Keep in mind that there's also going to be an investment allocation for SOX holders who want to convert their SOX to Chaos. So we're going to accommodate that in phase one as well.
All right. I see a question follow-up asking about you guys releasing an annual report with an MD&A. That basically means management discussion and analysis on a yearly basis. The token holders basically going on to say, I think approaching the finances as if it was a listed company can help to attract investors because it builds trust. What are your thoughts on that, Hitesh?
So very valid point, and that is part of exactly what we are doing. So this is not just be a good idea to do it. The way that the deployments are actually managed, Chaos actually deploys the capital with a firm in the US that is actually registered with the SEC. We went for that structure specifically because we wanted to meet the highest standards that we could. So there is going to be MD&A publications, and actually we are currently anticipating that it'll probably be more than once a year. Even though it's not necessary, we might have a report that is specifically on the energy sector and a separate report that is on the HARP program. So that is already part of our roadmap. That is exactly what we intend on doing. Now that might have to wait. That our first report might only occur after phase 3 is done, because there'll be too many changes occurring during the first 3 phases. So it might be after that, but that is part of what we want to do.
I see a follow-up question from Jimmy. You said that already cash flows and revenues exist. Would that mean 4.5% yield at 20 cents with current market conditions?
No, that would not. 4.5% is not the number. It was 4.5 cents.
Correct.
In yield per token, not 4.5%. Okay, which is actually much higher than 4.5%. So the current yield that we are generating is significantly higher than 4.5%. Again, not to say that we'll forever be able to maintain that, but at the moment it is higher. And we anticipate at the moment that once we complete our phase 1 deployments, right? So for example, if right on this call, there was $10 million invested for the phase 1, obviously tomorrow that $10 million is not going to immediately generate a return. We have to actually deploy that $10 million out there. The point was that once that $10 million is fully digested, which will take anywhere from 30 to 60 days, we anticipate that the yield would be about 4.5 cents per token during that phase 1. Okay, so that's what that number is referring to. It's not referring to an APY of 4.5%.
Okay. See a question from Aaron. Are Chaos tokens currently available for purchase on Dart.Cash? Will the bonus structure be honored on the Dart.Cash platform? I thought SPX was the sole exchange to purchase Chaos. For non-US investors, we are the only exchange to purchase the tokens.
Correct. The obviously Dart does have the ability to sell the tokens themselves, since Dart is the issuer. However, that is primarily for the US market, because SPX does not accept Americans.
Yeah.
Okay, there's a few more questions in the Q&A section. So
sure.
What is the budget for phase 2 marketing? Highly variable. That is not something that we have a committed amount for at the moment. It'll depend on what phase 1 accomplishes, what we have completed in that, and then what our yield, by our yield, I mean, what is the yield for the Dart team and the operator side from phase 1, because that's the war chest, if you will, that can be allocated towards marketing. We cannot and do not touch any of the returns being generated for the Chaos token holders themselves. Okay, will there be monthly reports, and will there be independent verification to verify the actual yield? How can we verify the actual yield generated? So no, there will not be monthly reports, because one of the big reasons to go towards tokenized markets and go towards independent markets like the crypto market is because the burden of generating monthly reports or quarterly reports is extremely high. Just to get those kind of reports done and just to have the right independent and analysts go in and do all of that is a very high cost. And frankly, is something being debated at the moment, that maybe public companies should have to change their required filings from every 3 months to every 6 months, because that would be a very significant difference as well. So keep in mind that is a very big expense in terms of time and effort and so on. However, we do intend on having independent verification of the things that can easily be verified. For example, we can easily get third-party verification on how much oil production is actually occurring on fields that are pledged to the Chaos project. That is not very difficult to do because that already occurs on a state level. It is also very easy to verify what the value of that production was, because WTI prices are global and they're independent. So there are some things that are very easy to verify, and they can be verified almost on a real-time basis. There are other things that are not that easy to verify. That's why I mentioned that we already do intend on meeting a higher than normal standard of going out there and actually publishing reports showing what we are actually producing, because we are registered with the SEC in the US, and we have to do those kind of filings on our side anyway. Now, beyond that, getting independent verification or getting third-party audits and stuff, absolutely open to it. Like I mentioned, many parts of the business do already do that just as standard practices. However, that is not something that you can do on a monthly basis. The cost is just prohibitive.
Okay, I see a question from Stin. So the question is this the right moment to ask about the conversion from SXDT to Chaos? And if so, I was wondering when it would be available and how much total SXDT can be converted to Chaos, considering Chaos comes from Hatchworks Treasury. Thanks in advance. So Stin, I can answer that one partially right now. The yield swapper, as we had promised, almost a year ago, when we started the energy buyback with Solar Oil, will be ready in about a month's time, we estimate. You will be able to convert your SXDTs to Chaos tokens on Spectre Exchange at a particular ratio, which reflects the difference in yield between the two projects. So if you look at SXDT net yields right now and you compare them to the average net yields that the Chaos token pays, that's kind of be roughly going to be the conversion factor. And the final details on that will be, of course, on the Spectre Exchange platform. In terms of the quantum, how many SXDTs can be converted, that remains to be seen. We have run some numbers in terms of treasury and book, and we'll also be monitoring the development of how Chaos does, how the team does over the years. And we'll just, we will take a call on that as and when it's time to take a call on that. But at first, you can be pretty sure that there will be sufficient book or order book depth, if you will, to cover these conversions. Because we do understand that, token holders, certain token holders want to make use of quote unquote excess SXDTs, or they want to exit the project, or they want to change their exposure, to a higher yielding token. And so that's something that we are, providing to the SXDT token holders as a service. And it's also worth noting that we are currently at the moment at a stage, in the business where we as a management team would like to own as many SXDTs as possible. So I think this is a good, opportune time to avail that facility for those of you who are interested in doing that.
Okay, I see another question about if the team is back from excursion to the wells. Okay, you can take that.
I can. Do you mind if I just go through these one by one? I think there's a question from Aaron. Once the IEO goes live on SPX, I assume the amount of Chaos will be less than 50 million tokens, since accredited US investors can currently purchase Chaos via Dart.Cash. Is there a chance there will not be any token for one purchase via phase one SPX? No, there's no chance of that because we already have an allocation, and that won't happen. So I've said that we have an allocation of around 1.5 million and a right of first refusal on a few more. So that won't happen, but there is a chance. We cannot guarantee that 2 months from now, yes, there might not be any primary or fresh Chaos tokens available because phase one has been completed. But in June, I can safely say that I think this won't happen, what you are saying, Aaron. There's no risk of that. Okay, Jimmy is asking, will the token be seen as a security? Hitesh, do you want to comment on that?
Sure. So yes and no, because if you look at the token as generating just more chaos as rewards, that's actually pretty standard DeFi practice. If you look at it as generating a USDC yield, that is a security offering. And the way that we have structured the token itself is that by its nature, by its core design functions, it only issues chaos rewards. However, the USDC reward is specifically done with some participating exchanges, in this case with Dart and SPX. On other standard exchanges, that might not be the case. Now, whether or not that gets us past the security label or not, I don't know yet. There's no way to know until we really go to the major exchanges with some aggression to see if that's how they'll perceive it as well. But odds are high that given the structure is similar to that of most other DeFi coins, that we should be able to get past the security label or avoid the security label, if you will.
Right. I see there were some questions about the excursion. Yeah, the due diligence team is back. It was a 7-8 day trip. The team visited a lot of fields, met a lot of on-the-ground employees, both management and, of course, operational staff. A lot of sense checking happened, and now some background checks are happening, and the due diligence report is being put together. As a reminder, note that the due diligence only covers the oil production, natural gas part of things. It does not cover the Asian hard asset arbitrage, right? That's a report we plan to do as well, to send a team out there, possibly towards the end of this year. So that by this time next year or earlier, a very comprehensive due diligence would have been put together on the status of Chaos as a project, because we are taking a very long-term view on this project. And so that is why we're also taking time in doing that due diligence. Now, it's also worth noting that this due diligence is done not on a financial level to do accounting and forensic accounting or anything. That it's actually done on a substance level to see, whether there's oil in the ground, who is running what happens to the oil, risk management, business continuity, and these type of things. For people that want to take certain level of investments, we always encourage you to do your own research and not rely on research that we have done and said, oh, because Hatchworks has said, this is fine, I'm putting money. It doesn't work that way, right? We own a position. We're going to be book builders in the project. We've done the due diligence for us. So you're more than welcome to look into that as a data point, but I would not use it as a barometer or reliable barometer to say, okay, it's received the Hatchworks green light or orange light or whatever, and therefore I'm investing. See a question from Richard Yu. Since you told us a year ago there are numerous oil fields available for solar project, can you tell us the reason you are abandoning that project and not keeping it as in parallel to Chaos project? Hitesh?
Sure. It's not being abandoned at all. All we're saying is that there is only a finite amount of oil production that we have at a given time. If that production is going towards Chaos, then we're not going to be putting that towards more SOAX. Right? It's a question of, do we allow sale of more SOAX? That's really the fundamental question. Now that there is sale of Chaos, which is accomplishing the same goal for us. And the answer is no, there's no sense in us trying to support two functions at the same time when it's really fundamentally the same core action, right? We are taking the money, we are buying equipment, we're deploying it on the oil wells, or we're buying more oil wells, whatever the capital use is in that case. But there is no sense in us trying to support two very different structures, especially when on one structure, the main issue has always been the staking, the locking up, which effectively makes it not very attractive from a liquidity standpoint. And so we are able to resolve that with Chaos while accomplishing the exact same thing. So I wouldn't really call it abandoning it all. It's just good common sense that you can't take the same oil production and assign it to two sides, because that would be misappropriation. That would be double counting the same production. And frankly, that's fraudulent. So we just wouldn't be able to do that.
In terms of the new, so the compounding feature, that's what ceases eventually, but the
Correct.
existing production and the capacity in the ground for SOAX holders that wish to hold, that continues as a 10-year liability, right? Or 20 years.
Correct. Exactly. Nothing changes there, right? So the way to think of this is really in terms of oil wells or oil pumps. There are a certain number of oil pumps that have already been deployed as part of Solar Oil. That production is already there. That's the amount being produced. The question is that from this moment on, should we allow more people to buy SOAX, or should we only allow people to purchase Chaos? And that's what we're going to allocate the new production towards. And that's all we are getting at, that since there's going to be new capital coming in from Chaos, we don't want more capital also coming in from SOAX, because it becomes, from a management standpoint, kind of a nightmare to try and distinguish between which capital is going where, especially if there's going to be mixing of funds. There's just a lot of different common sense reasons why it's just better for us to focus on one project at a time. Nothing changes for the existing deployment and the existing production. That is where it is. We just won't be doing new SOAX sales and therefore new deployments towards Solar Oil.
Okay, I see a question from Andrew Bailey. I understand why you don't want to run the two projects. The trouble is the compounding is not nearly as attractive if you have to compound at market price rather than at 0.1 USD. I assume he's referring to
SOAX
the price that SOAX compounds at versus Chaos.
No, so the mistake you're making there is thinking that the market price is not reflected in your SOAX compounding. SOAX just has a fixed dollar value, which is 10 cents each. So the number of SOAX tokens you receive changes with the market price. That's all that happens. In this particular case, the market price is reflected by the number of SOAX tokens, while with Chaos, price is reflected in the value of the Chaos coin itself. So there is, mathematically, when you break it down, there is no real distinct advantage to SOAX compared to Chaos. And depending on how the markets play out, depending on if the price of oil comes down and natural gas stays high, as an example, there might be distinct advantage to being in Chaos over being in SOAX. One other thing I really want to point out is that you have the capability with Chaos to purchase the coin and then exit from the coin at a certain point whenever you choose to. That is not something that is possible to do with Solar Oil. So if the price of Solar Oil, of oil itself, starts diminishing and starts dropping, and you have no recourse, you have to just stick it out for the remaining 6 years, 5 years, whatever the time period is. That's not the case here. That's not the case with Chaos. And Chaos also has the flexibility then to actually focus more of its development on non-oil assets, and that allows it to maintain the returns that it's producing. So look, again, there has been a lot of thought that has gone into why Chaos is a better option for the token holders, right? There's a reason why we are trying to make a transition from a very successful project, a project that has performed better than most of the DeFi things in the space. We are making a transition from that to Chaos for some good reasons. It's not for anything except that it gives a much better mechanism for our investors to actually get a good return.
Okay, see a follow from Andrew Bailey. Surely if my yield rises on Chaos, the price rises with this yield. So I kind of get a static amount of Chaos. But if my yield rises on oil, I think you're referring to Solar Oil, I get more SOAX and therefore more staking contracts. I think that's his question.
Yes. Yeah, valid point. You get more staking contracts, but those staking contracts don't have any liquid value to you. With Chaos, as you receive more Chaos tokens, if the price of oil is going up and the yield is going up, and therefore the value of Chaos coins is going up, then your true yield, your total yield, which is the appreciation of your asset, which is Chaos tokens, and the yield you're receiving in Chaos itself, the two of them combined will always outpace the yield from the 10-year production of of solar oil itself. The only way that solar oil beats it is if you genuinely actually compound it for the entire 10-year period, and then you wait the remaining 10 years, the further 10 years to receive that return. That's the only case where that changes. And again, we have run the mathematical models on this before we made this particular shift.
So I think Andrew Bailey doesn't have a question. He just has a statement. That is what I am doing, exclamation mark, 100% compounding, exclamation mark.
Yeah, and that's what I was addressing earlier, that you can do the 100% compounding on Chaos. So nothing is preventing you from doing the same compounding with Chaos that you were doing with solar oil.
Okay. I see a follow from Richard Yu. Hitesh, you were the CEO of Solar Oil. What is your function in the Chaos team? I don't see your function in that team, but maybe I've missed it.
Yes, because I'm not officially a part of the Dart and Chaos teams. I'm actually one of the operators. So the operating company that we have in the US that does the oil production at the moment, primarily with solar oil, that company is the one that has been contracted with Chaos. And obviously that's why I'm on here, because I've been kind of in the background, kind of helping structure the whole thing from the beginning to end. So I don't have an official role with the Dart and Chaos team, but I do have a role with the hedge fund in the US. I'm on the investment management committee there. And I also have a role to play in the operating company that is the actual oil production company in the US.
Okay, I see a follow from Richard Yu. So is it safe to say this was a takeover of Solar Oil by Chaos?
No, that is not safe to say or accurate to say. Solar Oil is just making, again, our company in the background in the US that is currently pledging its production to solar oil is choosing that moving forward, it makes more sense to pledge that production towards Chaos for the variety of reasons we've just gone over. But solar oil is much better seen as our first prototype project on tokenizing oil production or commodity production. Wildly successful, did its job, did very well. And Chaos is a natural evolution of it, if you will, because it makes sense to expand beyond just one type of commodity, to expand into multiple commodity types. And that's effectively what we're doing. One of the key things that we had to solve was eliminate the 10-year staking period, because that was not something that was very well liked by the community as a whole. Most people do not like the idea of being locked up for 10 years or more. Most people would prefer for their funds to be very liquid so that they can get in and out when they want. And this resolves that.
Yep. So a question from Adam Rings. When will SPX start its IEO? Well, the first rewards payout is 15th of June. So I would say within the next 2 weeks. Let me just confirm with Zisis. And Hitesh, from your side, we're kind of good to go?
Yes, from our side, we're good to go. And like I mentioned, if there are US members, if you want to go and get your onboarding process and accreditation checks done on Dart, on that platform, you can do that now. And then your SOVAX conversions can be handled as well. But from our side, everything is good to go whenever you are ready to pull the trigger.
Okay, see a question from Aaron. Does the token available amount on SPX IO show in real time, including what Chaos is currently purchased on Dart Cash, reducing the supply? It's not real time, but we reconcile this with the team, with the Chaos team, on a kind of 24-hour to 48-hour basis. We communicate that and we update that amount.
All right, well, gentlemen, it appears that I have another call coming up in a few minutes. I hope we've answered all the questions. If there are any more questions beyond what we have just covered, feel free to send them in to the SPX team or to the Dart platform, and we'll make sure that you get all of your answers, even if it's beyond this webinar. Kay, is there any of the final thoughts before we close up?
No, that's very good. So this webinar, of course, has been recorded. It will go through legal and will be updated and uploaded to the SPX webinar area in the IEO section. And we will now see you on the other side, hopefully after the IEO. So in the meantime, feel free to reach out to Spectre Exchange or the Dart team as you like. Thank you, everyone.